In this video, we're going to be going over the top 10 uranium stocks for 2021. You're going to want to make sure you watch this whole video. I've got a lot of information to put out there. Uranium stocks have been running very hard the past year and a half. If you know me, I've started covering uranium about March of 2020. And in the year and a half or so since these uranium stocks have ran very hard, I'm going to cover 10 stocks that I think have big upside potential still. And a lot of these are different reasons for each. I'll go over that. But first, hit that like and subscribe button below. I have a lot of information packed into this, and I want you guys to understand that uranium prices have started to run very hard. And with that, it brings a lot of FOD. So a lot of things are happening in the uranium market daily positive, but you also have companies in the mining industry that are going to be coming over from gold, copper, and they're going to rebrand themselves as a uranium company. But the problem is when you get hundreds and hundreds of uranium stocks, it's going to be hard to know which ones are legitimate companies and which ones have, management that really know what they're doing. So that is my job here. I've been covering them, like I said, since about March of 2020, and I have a whole list of the 10 stocks that I think are going to do pretty good. This list can change, but understand that with the companies coming into the uranium market, new ones, there are also people covering it all over the spectrum. Social media, you got people on YouTube with pretty big followings now jumping into uranium. And understand a lot of the mining sector social media experts in uranium are paid to promote stocks. Understand that I do not get paid to promote any stocks. I have been covering these and doing this on the channel because I enjoy it. I do not sell anything. I don't sell courses or any of that. And the reason for this is I want to be one of the best financial YouTubers out there, in the space. And I think I need to keep my name, pure. And how I do this is, I really believe in what I cover. I'm not always 100% on everything. Sometimes stocks don't always do what you think they might do. Management might change. And that's why I got to be plugged into the market 24/7. But in this video, I just want to explain that this is not financial advice. I'm just covering these uranium stocks. And I'm very bullish on uranium. And these are the stocks, like I said, I think are going to have big upside moves and have already done that. So actually, we'll first look at the uranium stock sheet here. Now, I have about 75 uranium stocks in here. And like I said, there are going to be new stocks coming every day that are going to be rebranding themselves in the uranium sector. And I cover these top 10 stocks. I'll cover them today. But in this document, I'm going to have everything listed. As you can see here, pretty much all the data you will ever need for the uranium stocks that we're going to be talking about. And the first one we're going to talk about is Western Uranium and Vanadium. Now, if you're looking at these top 10, I don't have them in order of which one I think is going to be the most undervalued, but these 10 here, you're going to see, and I have a bonus one, by the way, Denison's number 11. So these 10 here, if you notice on their charts, they're very similar. And I think one of the reasons for this is everything's really being pegged to the uranium spot price as well as the long-term price. It's actually gone up. We've had big news, for uranium in the past 6 months. Just pretty much every day there's something more bullish for uranium. But if you look at the chart here, it looks like one big uranium pie. So really in the long term, is the market really valuing each one, differently? In some ways it is. If you're able to get back in March of 2020 and a lot of the stocks that I got in, the multiples are a lot higher now, obviously. But, they've been doing a lot of the same moves. I mean, I think a lot of this is, the ETFs buying and selling, they're buying a lot of the same stocks sometimes. So, you start to see this, that when uranium's up, all of them are doing, big moves. But you can see here the percentage gains. This is initially what I bought the stock at. Now, I've sold some since, but the percentages, a lot of this is March and April percentage. So you can see these percentages here. A lot of them are up. The 52-week high here, explaining this. We got the 52-week high. There's still a lot of them are down. The only one that's not down off the 52-week high is Peninsula. So Peninsula is actually breaking out. I've got the market caps here. The ones that are really bright green, they're lower market caps. When I trade uranium stocks and any stock at that, I like, to get in early. I like, if I really believe in a long-term investment, I like lower market caps because that means that the company can grow. It doesn't mean that a Denison, a $4 or $5 billion company can't, grow to a $10 billion market cap in a bull market. But if you see here, a lot of the top 10 that I have in here, some of them are still around 100 million, even less than that. So we're going to be covering these, and I'll be using this chart a lot as well. I've got some documents where I collected the data and I put it all in one, area in the sheet as well. And this just helps me cover it for you guys. And if you want access to this, I'll have a link how you can get that in the description. So Western Uranium and Vanadium, this company is very interesting because if you saw real quickly here, the market cap's still very low, 135 million market cap, and the float is pretty small too. We've got a 38 million share float. And what I really like about this stock is the CEO, he's actually founder of Energy Fuels, ticker symbol UUUU. Now, they bought a lot of their assets from Energy Fuels as well as Denison, the Sunday Mine Complex. So this CEO, you want a good CEO, in your corner. And George Glacier's track record for uranium mining, he's been very successful, and I think the market is actually putting, high regards to this. As you can see with the stock price, it's up big, 1,000+% in the last year. So ticker symbol is WSTRF. They got a tight capital structure, about 30 million shares, like I said, little cash burn. The CEO does most of the jobs, but they got about 2.5 people working. That half a person is someone doing their taxes. They have over $4 million cash last time I checked. They also have some great technology, this kinetic separation, which they have a patent for. In the future, I think it's going to be pretty big for the company, to help utilize that for other, they can get royalties and stuff, maybe even sell the tech for exploration. Like I said, little cash burn. They have a lot of uranium sitting in the Sunday Mine Complex that was previously owned by Denison. They have some of the highest graded vanadium in the world. Okay, so this is something very interesting. We'll talk about vanadium soon with these vanadium batteries. It's a very interesting new take on battery storage, and it's really big in China. So as we see, commodity prices have been up. We'll jump over real quick. I just want to show you the commodity prices. This is as of October 19th. We are up massive in gas, 431% this year. In gas in the UK, in the euro, propane's up 128%, natural gas 94%, crude oil 71%, and still uranium's down here at 56%. We're still doing really good for the year for uranium, but you're looking at all these assets that these companies have, and their valuations can go up overnight when the asset that they have goes up multiple dollars, if not hundreds of percent. That's when these stocks really run. That's why uranium being tied to the uranium price, these stocks have high multiples. And this stock being such a low float, low market cap still, I think has a big upside. In here I say, I'm not gonna cover everything in here. Like I said, you can have access to the sheet, but we're gonna talk about the big points. So the CEO, I consider him the John Borshoff of the US/Canadian, this sector, North America. If you don't know John Borshoff, he's Deep Yellow. We'll be talking about him. He created Paladin. He's the founder of Paladin. They did a 100,000% gain in their stock during the last bull market. So I think Western Uranium could have a very big upside. They've got a lot of uranium. It's not the highest grade uranium, but their vanadium is a lot higher grade. Like I said, it's highest in the world. As you get to the Athabasca Basin, this is actually in Utah, Colorado, Arizona, New Mexico. But if you get into like the Athabasca Basin, you'll start to see those stocks have higher grades. It doesn't always mean it's better. There's different reasons why a stock could be worse off there in uranium because of the high grades. There's a lot more work they got to put to it. But real quickly, this VRB, vanadium redox flow batteries, in China, they've got this massive battery. It's like, I think it's like 5 of these VRBs that they will equal 1,000 megawatts of a reactor. So, and that'll house it's like 8 hours worth of electricity for 100,000 person city. So it's pretty interesting. These VRBs, they have like a 20-year life. And so vanadium, I think in the future is this is really started to be utilized more, especially there in China. Vanadium prices go up. So being a uranium and vanadium company, Western Uranium's pretty interesting for me. A lot of funds have been buying it recently as well. That's really what this push. When I first started covering this, it was under it was around 50 to 70 cents, and we've ran up really, all the way up to $2.87 today. So it's very, very interesting to see where this stock's going to go. But that's pretty much it for Western Uranium. We're going to jump into the next one. Next one's Mega Uranium. Now, I have this little uranium squeeze guy I made here because I think this could be a potential, meme type uranium stock in the future because of its name. Now, there's a lot of stuff that I want to cover on this stock in the future, but right now I'll be pretty basic. So this company, Mega Uranium, they've got a diversified uranium mining investment company and portfolio, a lot of assets. They have one of the biggest interesting things about this company, if you see here, is they actually own 19 million shares there in NextGen, which NextGen has gone up a lot. It's a very big company. They've got the Arrow deposit, and their market cap, just with these shares, it's worth more than their market cap. So having not only shares in NextGen, but they've got 460 million common shares there in Toro. They've got shares in Uranium Royalty Corp. They got 2 million plus shares, and Consolidated Uranium 1.7 million. So this company is very interesting. It's not like the other not like the other companies I was just explaining, but it is interesting. It's still very cheap. I think it's got pretty good upside still. It's $123 million market cap, 347 million share float. For the year, it's still up. We're up, I think it's about 222%, see, for the year. And the gains since last year is 600%. As we notice, a lot of these are up pretty big, ever since the bottom last year. And it's pretty insane. Some of these, even Encore up 2,000%, Bannerman 3,000%. That's at the absolute pretty much low. But it is funny. Some of these stocks I really do think still have a pretty good upside. You see that their market caps, I think a lot of uranium stocks will be in the billion float market cap. A billion market cap, but their floats being a lot higher than they were in 2004, 2007. A lot of times it can hold the stock back in some ways, but specifically with these, I think that a lot of these are still in the range where they still have upside, even if uranium takes a while to start moving. But that's, one last thing we'll cover about it. I highlighted it here. They do have a pretty good amount of skin in the game from, their president and CEO. So that is interesting. I like to see that whenever, the company has a good, skin in the game with management. I do like that. Okay. So that's one interesting thing that I do like about Mega. Next, we're going to talk about Anfield Energy Corp. Now, this stock I've been covering also for the past probably 8 to 10 months. This stock has had a pretty good move. We are still up 200% for the about 200% since the beginning of last year. It has not ran a lot like a lot of the other stocks. And there are numerous reasons. I'll go over those in this briefly. So the stock itself, they have pretty good skin in the game as well. But one thing that's been happening recently, we've seen is the management has been cashing out a little bit on their options. And one of the thing is this company, they also repriced their warrants a lot cheaper. So I do think a lot of warrant holders, as well have been selling to pretty much get the free ride. And this really relates to a lot of uranium stocks that we've seen not do, the biggest moves. A lot of them did financing that wasn't necessarily the best during the bottoms and during the 10-year bear market. So this is one thing you notice, like I said, you can see here, a lot of selling, a lot of cashing in by management. And it's not, it's not always the best thing for a company. When that happens, you usually see, a lot more selling volume coming in. But the other thing was they repriced the warrants, like I said here, at 16.5 cents, and this is in Canadian. So, you know, when they reprice it as well, they drop it. A lot of people see that also as somewhat negative. So, you know, the main reason I really like this company, and I still do, is that they've got a lot of assets. They're a mergers and acquisition company, you know, an M&A company, and they've got one of 3 of the mills in North America, the uranium mills. And this mill only ran about 6 months, the Shootaring Canyon mill. And this was in the 1980s. So it's been on care and maintenance ever since. But they have talked to utility companies, and they want to secure uranium as a new junior producer in the future. So they've got a path to production from utility companies, the CEO had said in a conversation earlier last year. And Uranium One Charlie project, they've got a fast path to production working with Uranium One. No other mill has been built, like I said, since. The cost of mills have gone up. You know, we're seeing inflation, everything's going up. So, you know, it's probably better for a company to buy up this mill. And that's what this company is going to want to do, is to sell their assets. They've got 34 assets in uranium and 9 in vanadium. Another thing, the CEO is a finance guy. So he's a former EV battery analyst. So they're also tied to the vanadium sector. They got vanadium, a bunch of pounds of vanadium. And like I said, vanadium's been going up recently in the past, you know, year and a half. I think we'll start to see that go up. One thing about Anfield, they also were doing a lot of promotion, you know, to, I think, really get some investors in there. $500,000, I think they spent with Red Cloud. But they want $60 uranium price for them to even think about getting into production. So it's a little bit higher than some other companies. But they are one of the only few in the ISR space there in North America. Like Peninsula Energy, but Peninsula, we're going to be talking about in a little bit, but the Peninsula does low pH ISR, so it's a little different. It's a little bit better in my opinion. I think once they get this re-rate, I put in here, it'll probably be a 10 to 20x, even at today's prices, maybe even more. They've also got some gold projects, some other things there in North America. They were looking to do 1 million pounds a year with their Shootaring Canyon mill. This mill has no liabilities for the environment. It's the youngest mill of the 3, like I said earlier. They bought the mill for like $7.5 million from Uranium One. And the Uranium One actually bought it from US Energy for $100 million back in 2007. So I think the upside on this is a lot bigger than people are, you know, believing right now. And, you know, with all their properties, what they plan to do in the future, you know, selling a lot of these assets and, you know, really pushing to get into production. I think it's going to be a pretty fast mover, especially once we, hopefully a lot of the warrant, you know, everyone, you know, with the warrants, you know, we get rid of all that. You know, when all these people are trying to take, you know, early, you know, investors are trying to, you know, get a free ride, you start to see these moves. And some other stocks in the uranium sector are also doing this same thing. But the CEO, I do like, you know, some recent interviews, what he's been saying, but this is a Shootaring Canyon mill, and it's still very undervalued in my opinion. And if you compare it to other companies, you know, their market cap to resource multiple, it's still pretty good compared to a lot of companies. Now, this has since changed a little bit. UEX has more assets now. You know, with Peninsula's low pH ISR, things will change. Fission, they've got a lot higher grades now. These are stocks we're going to be talking about in this as well. So they got a fast track to production once things start to, you know, start to happen for the stock, and uranium prices are obviously going up. But I do like that they've got a lot of assets, and basically this company very undervalued, and I think that, you know, it's just been beaten down. It's a contrarian investment still within the uranium sector. And that's pretty much it for that stock. We'll talk about the next stock here. So a stock I've been covering as well since mid-year. So UEX Corp, they recently actually acquired 50% of this JCU deal, which is around 50 million pounds of U3O8. The stock has done little moves since then compared to what I thought it would do. And, you know, there's a lot of reasons for this. I believe management, you know, it wasn't necessarily a bad thing in my opinion that management came out and said that they had planned to do this deal with JCU, and in my opinion was a little premature. But that's when Denison came in, who we're also going to be talking about, and they came in and said, and kind of gave a better offer to JCU. So they only got half the deal. They had to pay more money. So a lot of people saw that as negative. I still think it's good that they've got these massive assets, but the stock, it's still a very low market cap, low float still compared to where it can be, especially with the previous uranium bull market. We saw this stock trade over $9 plus in the previous uranium bull market here. And the float share back then, there was only about 200 million shares back at the at the peak, or 180 million here. There you go, 180. So one thing about UEC is it's still fairly priced. I think especially it hasn't ran as much as compared to some of the other stocks, like say Bannerman, who is a lot bigger market cap than they were back then during the previous bull market in uranium. Yet we still see big moves with the JCU. With 50% of this JCU deal, it really puts them up there. They have a lot of uranium, and the company has some of the biggest uranium, uranium tier 1 deposits out there percentage in. So they got Phoenix, Millennium, and the Gryphon projects. They've also got these tier 2 projects, Kigavik, Shea Creek, and Horseshoe Raven. So if you see here, these are the biggest here. Arrow, this is the biggest. If you go over here, the biggest grade, and then as you go up, it's the biggest grade, and this is the size in million pounds over here. Obviously our biggest ones, and this is a future one, Arrow, but we're still in the good range here. These are still very good projects. They're high grades for the future. And one thing about UEX that I do like is they really got a pipeline from the exploration side as well as the development and production side. Wide variety for the stock. I do like that. They're in the best location in the entire world, the Athabasca Basin. And if you see here, they've got a percentage in a lot of great projects, and some of the biggest companies in the world they're going to have joint ventures with. So that's very positive. The team here will briefly explain. They've got a good team of geologists, and they've found a lot of uranium and other assets, especially cobalt, in the past. Now, I think that a lot of people, kind of look down on the fact that this company, they're more, I guess, geologists than pushing the stock out there. Yes, they want to raise money, but I think with them going on, a lot of talking heads, YouTube channels and things like that, it might have done a little bit of damage on getting that JCU deal. And a lot of people really didn't like, how management handled it. But in the long run, I think that the stock's going to still do very well. If we get to $9.50, I think 3 cents that it was previous uranium bull market, we could, we're trading at like 43 cents yesterday. And if you see this, all of the uranium stocks, this is 1 day gains percentage. U308 Corp, we'll talk about in a little bit, 15%, Fission 12%, Denison 12%. I mean, these are big moves in uranium. And as you see, a lot of the charts, boom, they're all the same, like I was saying. So does it even really matter in uranium? In the long run, I think it does, but in the short term, a lot of uranium stocks, eventually they'll start to pull off from each other. Some will do a lot bigger moves in the future. We've seen from the charts, a lot of uranium stocks have done massive moves. Peninsula was one as well that had taken a while to really take off, but look, we're still at 52-week high versus all the other uranium stocks are still down from their 52-week high. So Peninsula, they don't have to raise money like a lot of the uranium stocks because they've got these long-term contracts. Yes, they're lower than what people necessarily, want on some of these, but they also bought pounds. I think it was 350,000 pounds of the U308 during this cheap, spot price that we had this year. And now the spot price has gone up a lot. I think it was $48 the ask. And another thing real quick we'll cover, SRUUF, Sprott Physical Uranium Trust, from my previous videos, they're buying a lot of spot uranium. And recently, the stock had been taken off the OTC pink sheets, and now it's actually back trading. So a lot of people can trade it again. We're going to see more volume. And I think, and I even put that here, I tweeted it out, we will see, because of the OTC Pink listing again, we'll probably start to see volume trading a lot higher again in this stock. That's really what pushed spot uranium up. This is very big news, as well as Kazatomprom the other day coming in and saying that they're going to start buying physical uranium as well. So these are all amazing things. The restarts in Japan. I mean, you know, I could go on for days just talking about this. Now, Peninsula Energy, they are doing this low pH field demonstration, low pH ISR in the US. They're very well led. Their CEO, really like him, Wayne. He's a former president of the Uranium Producers of America, and he's a former CEO of UR Energy. He successfully oversaw the design, construction, commissioning, and ramp up of Lost Creek Institute Recovery uranium projects there in Wyoming. So he's very qualified. They have zero debt. They have 6.8 million cash. This was back in April. Low cash burn. They can get in production in less than 6 months for about 6 million USD. They've still got a low share float. They've done a reverse split since, so a lot less shares than they used to have. This stock had burnt a lot of people over the 10 years because they really started during this uranium downturn during Fukushima. So that was one thing that was really negative for the stock. But I think that this company, because they've got good management, Ron Chamberlain, their CFO, he was actually the inaugural CFO of Paladin, who actually brought up the Lingerhanger mine there in Namibia, and they did the 104,000% gain. So we'll see how this goes. I did ask Wayne a bunch of questions. We won't be able to get to all of them today, but basically the questions that I like to ask to see if a stock can become a 10 bagger or a 100 bagger at that. And, you know, these questions, it's really, like I said earlier, one of the things is capital allocation, CEO management, skin in the game, acquisitions, smart leverage, managing debt. All of these things, Wayne was answered them very well. I liked a lot of his answers. You know, and some things at the time he couldn't tell. You know, he couldn't really elaborate too much. But very bullish. I really like Wayne. He's he's a straight shooter. He doesn't pump like a lot of CEOs out there. And this was very interesting. I want to show this real quick. So Peninsula could be one of the first U.S. low pH ISR mines coming online in less than 6 months' time. So Paladin was one of the first companies to bring a mine up during the last uranium bull market. Now their market cap was a lot less, obviously, but the market does like this. And one thing it was that Paladin, they really didn't get in. They got in production like right at the peak of the uranium bull market. So it's really interesting to see what a uranium company that's bringing up the first mine, you know, can do when uranium prices continue to go up for multiple years. So we really don't know what's going to happen. So their project's very interesting, and you know, I really like the company. That kind of doubled up there. I like the location. There's a lot of good companies you can see here. There in Wyoming, the state is very, very pro-nuclear in mining. And what's great about this ISR inlet recovery is that they really bring the land back to normal. It's not like these open pit mines that really mess up, you know, a lot of the land, and it doesn't look good. And a lot of people are against that. ISR, it looks better after they do it than it did really before. So that's one really good thing that I do like about Peninsula. They don't have as much uranium as of yet, like other companies, and that's one thing. People think there's less upside, but I think that once they are able to get more contracts, start bringing in cash flow, I think that because they are Lance is the number one licensed producer in North America and like top ISR producer and top 10 globally, as I listed here, that it'll see good moves and they'll be able to buy up other assets. So don't count them out for that. And you know, I'm really still bullish on the stock, on Peninsula, but like I said, it hasn't done as much of a move as some of the other ones. Still very interesting, and I still think it's got major upside once uranium really starts pushing over that $50-$60 range in the long-term price. So it's going to be interesting to see. Another one, Fission. So Fission I covered, what was it, about 50 cents when I started covering it like a couple months ago, and you just see that massive move. We almost hit $1, 1,000% ever since last year's lows. Market cap's getting a little higher. You notice, like I said, this is another one. Looks very similar, the charts. But if you see here, they still haven't hit the 52-week high that they've had and closed. But one thing about Fission is they've have some of the highest grades in the world. They're in the Athabasca Basin. I really do like the upside here. I like the fact that I think in November, December, we're going to be able to see the full grades, and they're saying that this is going to be the highest grade in the world. So I really love the upside. I think because a lot of their assets there with Fission are in the west of the Athabasca Basin, I think that's really where the future is pushing. So it's going to be interesting to see where this one also goes. And I covered that more in detail in another video. But this one, next we're going to be going over is Deep Yellow. Now, I have some things to say about this. Haven't really touched on them too much in a while. Remember, this is John Borshoff, CEO of Paladin, that did the 104,000% gain. This stock is up 1,000% almost since last year. It is still down from its high. Our market cap's about 404 million. Still pretty small. The float, 348 million. So I like it when stocks floats are less than, especially in the mining sector, less than 400 million. If it can be less than 100 million, I think it's great. But then you do run the risk of the company diluting a lot of shares sometimes as well. So you got to find that fine balance. But if you notice here, the volumes are starting to pick it up here. A lot of these uranium stocks. But Deep Yellow is one that we normally see a lot less volume if you compare it to other stocks in the uranium sector. Same thing with Western Uranium, but when it does get that volume, it really starts to move, okay? And you start to see massive moves here once that starts to happen. And Deep Yellow, they have such a good management team. It's pretty much the entire team from Paladin. Now, that's the stock, like I said earlier, that did the biggest run during the last bull market. They recently raised a good amount of money, 42 million at 65 cents. So they've got a good amount of cash. They can raise more cash with their options. They're looking at 2 to 3 projects to establish a timeline at 2024 to 2035. So they're looking in the long term as well for the future. Current capacity is about 3 million pounds a year, 11.5 year mine life, 3.8 year payback. So they want to reach a large 5 to 10 million pounds a year as a low-cost uranium producer, similar to the previous Langer-Heinrich mine style, the open pit that they actually had. Now they're located there in Africa, Namibia. So it's a great location, a lot less lower grades, but it's super easy for them compared to the Athabasca Basin to get these permits and to get these mines up. They can get them up a lot faster. The stock was top 50 on the OTCQX market. And one thing I do like about management here is John was not really pumping uranium the past 10 years in the bear market as it was going down. A lot of CEOs diluted shareholders, and it was very, very negative for a lot of stocks. Borshoff, stuck to his guns, and yes, things happened and changed and made uranium prices and the supply go up a lot sooner than he was expecting, but his forecast is still in line with pretty much where we're going with uranium, and he's a lot more bullish, I think, in the past 6 months. But I do think having a management team like John Borshoff and his team is very, very strong for the stock, and in the future, when they get these mines up, it's going to be very positive for the company, and we still have a lot of upside. But if you do look at Deep Yellow, you can see compared to other stocks here, we'll look at their grades. You can see on here, we're right here. And if you see, their grades are a lot less. ppm 261 versus a Fission's 18,000. And this is just because of location. Now, like I said earlier, the grade doesn't always necessarily matter. When you have higher grades, it's way more radioactive, so it does take a lot more to mine. And a lot of this is also there in the Athabasca Basin, the higher grade stuff. You have a lot more complicated mining techniques. It's not necessarily the same. You know, they got these like freeze walls, and it's more, you know, more dangerous, and that's why you see it take a little longer. And you also got Native American tribes there in the Athabasca Basin that sometimes litigate, hold up, you know, permits, and we see that with a lot of stocks in the mining sector there in Canada. One thing with you usually don't have to worry about that with, you know, stocks like Deep Yellow there in Africa, and it is interesting to see where John is going to take this stock. Obviously, the market cap is a lot bigger than it was in the previous, you know, beginnings of the bull market for his stock. We're way up there in a lot of these uranium stocks with a higher market cap. And I still think that there's plenty of upside. I think that the uranium bull market is going to be a lot longer this time, and we're going to see a lot bigger runs in uranium stocks. And some of them, people are going to argue and say, it really shouldn't be trading like this. A couple of those, the next two we'll talk about, Encore, 2,200% since last year. This company still trades also on the OTC. And this stock, man, I was buying this stock early, but I sold out way too soon last year. One thing that I did like about this company that I covered back then was that I really liked that they were buying assets from Westwater Resources. We're still at a pretty low market cap, and obviously the float is very small compared to a lot of these other ones, 137 million. So when you get that volume in here, you see big moves in the stock, okay? Because of the lower floats, when you get tens of millions and even hundreds of millions of volume coming into these lower floats, that's when you see these massive moves in stocks, especially uranium stocks. So Encore, I do like the fact that the stock has done well. You know, like I said, I covered more in other videos that stock, as well as Bannerman. We'll touch on Bannerman really quickly. So Bannerman, their CEO is a little different. Their CEO is Brandon Monroe. He is a lawyer. He's got heavy skin in the game, and the stock itself, Bannerman, has done really well. And this was a big miss for me because I bought really early at a few cents, and you know, I was a little discouraged by people because a lot of people were like, oh, look at its market cap. It's so much bigger than it was in 2007. You know, so people back then were like, oh, it's not gonna do as good. So, you know, it went off my radar, and, you know, their CEO's being a lawyer, he's really good at speaking, and he really gets out there, and a lot of people are backing it. So one thing, if we see a big dip, I'm probably going to get back into Bannerman. It might be more of a swing. That's why it's down here next to Denison, the last stock I'm going to talk about. But I'm not saying it's not a long-term, good stock, but the market cap is $500 million already. And, you know, we're like 5 times bigger market cap than we saw during the last uranium bull market at the peak. And, you know, Bannerman if you see here, Bannerman's got their EV in million pounds, about 115 million, you know, so compared to other, it's not as good compared to some of the other stocks out there. We've also got a lot lower grade, which, like I said, it doesn't necessarily matter in, you know, the long run. You know, if they can get these, the projects going, and, you know, people believe in the company and more volume comes in, that's why we're going to see these runs. So yeah, back in November, it was like 3 cents on the OTC, 3 cents. And now it's like, what, 31 cents. So this is getting a little crazy, you know, seeing these moves, right? But what's crazy is if you can get in early on these uranium stocks, the compounding effect is phenomenal. That is why I like lower market cap stocks, because I believe that a lot of these, especially these, will be over $1 billion market cap when uranium hits $100, $200. Some of these $5 billion market cap easily. If uranium hits 200 and we see long-term prices, we could see every single one of these top 10, I think, could be $1 billion market cap. And the market doesn't always, you know, you're not always going to understand why a stock is trading the way it is. You know, sometimes we've seen 2,000-3,000% moves in one day for stocks this last year. So I think when this volume comes in the uranium market, we're going to see massive runs. And that leaves us with Denison Mines. So Denison, they actually had, we have some chart here. So Denison had, it was around 1 billion shares traded back in February. So this little chart here, you can see massive, massive volume. Now, during the last bull market, it got up to about $15 Canadian. And the exchange rate, that it was close to that during the last financial crisis. So close to a US dollar. So it was about 15 US dollars converted. So we had less than 10 million volume. I made this chart a while back. But as you can see, when we get this type of volume coming in, even though the market cap's a lot bigger now than it was during this time when it was first started its run, the prices, we could see a lot bigger moves, I think, than we saw before here. But you got to notice uranium stocks, they've had these massive drops. Okay, we're going to still see this. It's not uncommon to see a 50% drop in uranium stocks. Another interesting thing was the company in 2007 at the peak, Denison, their revenues were only about 9 million. So they actually had a net loss of 17 million during that time. And a lot of this was market related. They had a lot less projects compared to what they have. The revenue coming in wasn't even that much, back then, compared to where I think they'll get. If they get this ISR going, this ISR project, and they have all of these added, 50% of the JCU deal, just 100 million NPV was added with this Waterbury project. I think that you're going to start to see a massive move because this stock is one of the few traded on the New York Stock Exchange, the big boards, I mean. Denison also bought 2.5 million pounds at $29.61 of spot uranium, $24 million worth. And it was like I think it was about 75 million that they initially bought, and that was in Canadian. So with the uranium price going up, seeing like $48 on the ask, we're going to see massive, massive runs in a lot of the stocks that can be traded. And I think this is one because of Robinhood, and I've said it before, Robinhood and a Webull, they're able to trade these stocks. And when you see that, when you see the volume coming in, that's when it's going to start to get crazy. And another thing they, with this stock, the max is 6 million pounds with their Phoenix ISR project. 6 million pounds at a low cost, 109 million pounds with a 14-year mine life. This is really, really big. Phoenix. This to me, I think, is really going to put it to be in lines with a Kazatomprom possibly. If we see uranium, like I said, hit 200, they can get these projects going by 2025, 2030. It could be the next Kazatomprom, I really think. And we'll see. Obviously the market cap can run a lot more. But another thing I want to show here is this is my Discord, and I want to show you exploration upside for a lot of these stocks. Now, a lot of these stocks you can see here. This is the mine life. And the way it charts usually trade with mining stocks. So in this first range, this is when you're in the pre-discovery phase for these explorers. Once they find something, positive results, the share price goes up. And when they need to start raising money and they sell this, they get the feasibility study going, it usually drops. This is the orphan period. This is where we've seen stocks like Peninsula Energy. This is what they've been in for 10 years plus, at least 5 years. And then we're starting to see it as they get the production going. We're going to start to see these go up. Now, eventually uranium stocks always become depleted in the future because, they have to have new projects and they run out and then overproduction starts. But when you have exploration upside like Fission and even Denison and UEX, they have big upsides. And these stocks, they can be multiple billion-dollar market caps plus in the future. And mining stocks, it's very, 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 very hard to get into these stocks. But remember that a lot of uranium companies, or we call them uranium companies, are going to be rebranded from gold stocks. So this is very important. And if you guys got to the very end of this video, I'm glad you guys got this far, because I'm going to reiterate this. Very important. There's going to be a lot of craziness coming to the uranium markets when the uranium price goes up. You're going to need to have this uranium type sheet. You're going to need to be able to see what stocks there are out there. I have all 70 plus uranium stocks listed here. If you want access to this, they will be in my Discord. There's a link in the description below. I have all the information updated daily. It's live for the stock sheet for uranium and related stocks. There are a lot of stocks I will be covering, and just because I say that these 10, 11 stocks are the quote top ones right now, that could change. I never marry a stock. With uranium stocks, you got to be on edge all the time. You got to be plugged in the market. But as you've seen, a lot of these stocks are trading very similar. A lot of these stocks, their stock charts are very similar, especially in the past couple months. All of them pretty much are doing big runs daily, and if we see a drop, usually they all do a big drop. So at this point, if it's new investors looking to get in, definitely check out the uranium chart, check out the low market caps, check out the presentations. I have them all listed here. You can go to the presentations on this. And if you guys like this type of video, let me know below. Let me know what stock I should cover next in the uranium sector. The uranium documentary is going to be coming out soon, the third one. Uranium is exploding in positivity all around the world with Sputnik, aka Kazatomprom, and Sput buying up and squeezing the spot price. So I'm very excited how this goes, and I hope you guys enjoyed this. Until next time.